Focus. Ideate. Innovate. Enable.
India is an idea whose time has come. Every day we see newer and newer businesses being floated and new crop of entrepreneurs emerging. But many of them face some teething trouble or hurdles. And the problems could range from raising money, people skill, technology or marketing. Clearly, there are no ready-made guides available for this class of people. Realizing the need to fill this gap, CNBC, TV18 and BSC are hosting this mentoring series. The underlying objective of this series is to guide and advise passionate entrepreneurs on how to overcome the hurdles. Today in our studio we have two such passionate entrepreneurs. Mr. Jayesh Parikh, founder Chem Process Systems, and Mr. Manor Bujwani, founder Diet Foods International. Guiding these two entrepreneurs are Mr. Keval Handa, chairman of Salus Life Care. Keval was a former MD of Pfizer and has over 30 years of experience across finance, commercial strategy and business development functions. Mr. Prashant Mehta, partner Lightbox. He is a venture capitalist who has worked with Lehman Brothers, Yahoo and has successfully run an advertising technology company called Comely Media. Mr. Ajay Thakur heads the BSC SME Exchange. He meets more than 200 SME entrepreneurs every month and in the process has helped more than 150 SMEs list on the BSC Exchange. Gentlemen, welcome to the show. Jayesh, if I were to begin with you, could you tell our mentors here, what is your line of business, when did you start it, how much money you invested and how is it going now?
Look at our company Chem Process System Private Limited. Typically an entrepreneur and then 2 engineers or 3 engineers with bright technical background started without a single penny, so-called. And raising from 2 square yard of plot to today we are spread over 11 acres with 3 people to now more than 300 people. And this has happened only because of, number one, we are doing a complete technical job and serving the demand of majority of the process industries. Based on our technical knowledge on thermal technologies, we call it vacuum and heat transfer technologies, we develop various kind of process equipments and the process plant later on we expand it. It goes to all power plant, petrochemicals, refineries, you name it, food process industries. We are there where is the thermal processes. We started with a very small capital of hardly few lakhs and today we are doing more than about 130 crore turnovers.
Manor, about you, how did you start? How was the journey?
So we started with again very small investment. Company does all kinds of agro processing like pulses, rice, spices. From the raw material, say raw pulses, we are processing and splitting into the final product pulses. What you are getting from dal. Started with 5 people. Okay. And right now around 100 people are with us.
Okay. So if I were to ask Jayesh, what is the big challenge are you facing? Are you facing money problem or technology problem, marketing problem?
The first challenge when I started this company, outskirts of Ahmedabad where nobody was going. Challenges was how to retain the people, how to develop them, how to make them skill, how to make them experts on the subject so that they can interact with very well with the corporate level of the people. So first challenge is development of the skill and technical skill.
Keval, you want to take?
So you have to put a lot of effort.
Exactly.
In building that culture.
Yes, sir.
Of training, safety, quality,
True.
and innovation.
True.
Now that has to be in your DNA and the DNA of the entire employees. You have to have different types of training. Soft floor requires different training, supervisory requires a different training, middle management requires different. You have to identify the training requirements or the gaps of what they are doing and what they require. So therefore you have to focus on different types of employees at different sets of training. Now you either do through institutions,
okay,
or you hire excellent training group in the organization, a group of 3 or 4 people whose entire job and living would be to train people across.
Prashant, you want to add to that? And
yeah, I think, this is something that we experience in a lot of the companies we invest in, is how do you actually first attract people? It seems like you're actually able to attract good people.
Yes.
But then how do you retain them and how do you develop them? And I couldn't agree more. It has to start with culture, and that starts with really you. But what that means is, in addition to training, which is very critical, is we kind of think about it as two different things. One is financial motivations and incentives to retain people, and the other is professional development and other measures. So on the financial side, what we're finding is that especially for the senior people, you know, your manager level folks and above, one thing that we have to start to do is give them ownership in the company. The second part is on the professional side, where we're seeing is, in addition to training, it's transparency. It's how do you run your organization? Can you push down decision making? That empowers your team. That will, you know, help them feel like they own part of the company and they are responsible for actually driving the growth, and that'll help them to stay longer.
Yeah, Manoj, what is your big concern? What is your big challenge? Is it technology, adoption of technology, cost of technology? Do you have a people problem?
Number one, the technology. Number two is the R&D. Number three is that skilled technologist.
For him is to identify a right partnership for technology, where he can actually partner with someone who is doing this abroad, and even look at a joint venture for value addition products.
Absolutely.
Okay, so the solution for him is to look for a partner.
Look for a right partner with this technology that is available.
But for that, government assistance is also required.
No.
I think what's really important is that don't wait for the government to invest in this sector, because what's going to happen is somebody else in your space, in India, will go about doing this, will license somebody else's technology and get products to market faster, and all of a sudden they'll start building their brand, versus you may still be stuck thinking about government's not investing in it, therefore I'm not going to invest. I think you should take the first step and invest in this technology. But the fastest way is to get to the market by leveraging somebody else's technology, and I'm sure that those folks out there all want to get to India. They all see the massive population, especially in your case, which is, you know, real basic, the most foundation of the food categories. They're going to want to participate with you. So I think you could actually be in a very strong position to negotiate with some of these guys.
Now, let me talk about the money part. Is money a problem for both of you all? Is access to fund, rate of interest? What
rate of interest is number one.
Okay.
Because rate of interest we are getting at something else 10 point, something else 10.3. And
what is the counterpart getting?
Counterpart getting at 2.5.
What about you, Jayesh?
I don't have that much acute problem of the money, because we are growing, we are investing our own profit, and especially technical firms, and those are, we make reasonable profit and we have reinvested. But yes, money is a problem. When I am looking at a large project which is, say, 1.5 times my turnover, yes, we have developed such products, so we are at the horizon now.
Okay, well, first.
So I mean, for you, I think, you know, this type of cyclical thing, the best way to cushion it out is to work with the farmers.
Right.
Now, help getting farmers financing done, or line of credit for the farmers, and you tie up with the farmers for the product at a fixed price. That way, what are you doing is actually making the farmer also more capable. Work on a productivity of the farmer, very, very important. Your technology has to go backward. Your productivity of the farmer has to improve, because the moment their yield improves, your value creation takes a dramatic.
Absolutely.
That's the one. So once you are assured of a consistent supplies, then the fluctuation comes down dramatically. The other thing is that if you're too much of commodity, you know, buying, selling, then you need to have storage space. There a lot of investment will require in storage space and all. So either you create storage space at yourself, or move your storage space at different farmers' location.
Absolutely.
So there are different solutions to handle in a different way to do it. Interest rate, of course, you're saying India's interest rates are high, with a lot of this cash coming in. You will see good news coming to your end. Now the interest rate may actually collapse.
Okay, Ajay, is listing a solution for these people to raise money?
Of course.
And if they list, what are the advantages and how should they go about it?
May I ask you,
Please.
what should be the optimum size in terms of turnover, in terms of what is as growth, to go to the SME exchange? Because sometimes I am confused. Because I am sustaining with my own money and still doing R&D. Of course, and looking at the market, looking at the opportunities. But as per your expertise, what is the yardstick to go to the SME?
See, there are only two ways to look into the financing part. Okay, one is debt, another is equity. Okay, when we don't have SME exchange, okay, there was a trading platform, a stock exchange. Even if you have a turnover of 20 crore, 25 crore, 30 crores, even at that point of time, people got their companies listed. See, the major problem with the promoters is that there is somewhere confusion of taking equity or diluting equity. See, there are only two people who have been given the power to issue currency. One is RBI governor. So as far as rupee is concerned, that is the equity of government of India. And another is promoters who can issue the currency, which is called equity. Okay, well equity is nothing but it's currency which you are issuing to the investors and getting money. As far as stock exchange is concerned, no, it's a diversified investors. It's not one or two venture fund or PE fund who is sitting with you and trying to decide what should be your growth. Of course, equity is the riskiest instrument in the hands of the investors. So some private equity guys and etc., because they are taking a huge risk on you, they will ask for more ROI, return on investment. In the stock market, it doesn't work like that. You may have 10% growth, you may have 15% on some year. Because of everything, economy is going good, it can be 25% or 30% return also. So not a single investor will question you that, boss, your ROI, return on investment, should be this. But first thing that the promoter needs to decide whether I am going to dilute my equity or not.
Exactly.
Okay. If you want, see, I am happy if I can sustain my business, I am happy with that. Then you have to decide whether I want to be a cent businessman or I want to be a real businessman. If you want to grow at a higher pace, at a higher speed, then you have to leverage both debt as well as equity.
Very well.
No, you can't sustain on equity by your internal accruals. See, today what you are doing by using internal accruals, the profit that you are plugging into your business expansion and so on and so forth. There may be growth 10%, 15% and you are a happy guy and all those things. Now, if you want to, as you have initially only said that I want to skill or want to put money on a skill development, and ESG has rightly asked that how much money you are putting in. Now, if you want to allocate more funds towards all these intangible activities, okay, which is going to give you much more and much faster return, then what are the ways? Is it only the internal accrual? Is it only the debt? Is it only the interest rate? No. Worldwide it has been proved, it has been seen that all those companies which have become large company or blue chip company, they have leveraged equity at some or other point of time. So we should dilute, we should take the exposure, and the most important thing what happens with listing is visibility, brand building, transparency. Even though you are in unlisted space, you may be transparent, whatever. But the perception in the outside world is there's a one-man industry.
So credit rating also comes in.
So the credibility, if you need to increase, if you want to the people to believe you that you are a transparent, then you have to go through this acid test of listing.
Excellent.
And you get listed, and all these things will come in.
Everything will fall in place.
Yes, everything will fall in.
So does this answer your problem of raising
answer.
money, and does it
And
has been a
good
strong
guidance.
case to get listed?
Right. One basic question from my side is that, see, SME entrepreneur of say investment of say around 5 crore or 7 crore and having turnover of around 25 crore, whether he can enter into the SME exchange?
So any company having post-issue paid up capital of 3 crores, net worth of 3 crores, 2 years of profit and 3 crores of net tangible asset can get listed on the SME platform. Yes. And it's a 3-month process.
So, final parting advice, if all the three were to give to budding entrepreneurs like Jayesh and Manor, a lot of people are watching this program, what are 2 or 3 things they should do?
So for Jayesh, I think very important is to build long-term relationship with B2B partners.
Okay.
Once they see the value in your innovation, the value on your technical staff, they will support you a lot.
Yes.
I think that relationship has to strengthen a lot, and you have to demonstrate that there is innovation, there is R&D which can benefit to the company. And I have seen companies actually investing a lot in that. So that's value creation that you have to do. On raising of the fund, it's again, as you asked, what is the right time and all. Going to the stock market and getting funds, if you get funds, and you don't know how to use the fund, is the biggest challenge.
Okay.
So
Very
therefore,
good.
you have to be very clear how you're going to deploy the funds.
You should not go by the peer group pressure.
Yeah.
Okay.
And how are you going to effectively utilize the fund, and what is the returns the fund is giving? If it's not making sense, just don't go for the sake of going it. Then you will have more troubles than you will have. Presently you have. So be careful in doing that part of it. A lot of unlisted companies, SMEs, have grown to 1,000 crores even without going to capital market. So you need sometimes strategic partners also.
Exactly.
Look for some strategic partners who will invest in your venture. That may also help you to raise your money.
So what about Manor? Anything particular you want to give?
Manor, I think, I would say Manor is in a business which today is where the country is looking for real value in the nutrition of the food they are eating. Now, if you can create the value in your business, either through value-added products that you generate through the byproducts, or including the main pulses and all, and you nutrify the pulses or you vitaminize the pulses, or you do something, that may change the business. So you need to look more forward as well as look backward for your raw material. Both ways you need to focus on.
Okay, Prashant, both for Jayesh and Manor.
Yeah, three quick things. First of all, I think what you started off by asking is focus on your people. I think your talent, that's ultimately what's going to help grow the business. We talked about changing culture, and it, as we also discussed, doesn't happen overnight. So you have to stay focused. It's a long journey, but that's what's going to yield the single largest benefit to your business in the long run. So one is that. Second is investing in technologies. Every business we're seeing today, from grain to high-tech businesses, are getting disrupted by newer and newer technologies.
Correct.
So find, whether it's looking at B2B partners, finding international guys to license it from, figure out a way for each of your businesses to invest in technology. And we understand some of the challenges you may have, that downstream no one wants to buy it unless you've gone scale. But we'll talk more about how you figure that out. But it is really imperative that you start investing in technology and R&D now, because otherwise your business in the next 5 years will look very different, because somebody else is going to come and disrupt you.
Yes.
And last but not least, I know it's said enough, but for financing, I think there are a lot of different options out there. I think what at this stage, what I would say is find a good advisor that helps you think through whether it's the right time to go public, or, as Keval said, people are staying longer and longer private because they don't want the transparency. On the other hand, being public can help you create a better brand.
Yes.
So there's all pros and cons. You've got to figure out what works best for you today and what's going to take you into the future. Yep.
Okay. Ajay, final word?
I think most of the things have been said. But one thing is very important, is that whatever you do, at least keep your cash flow positive. That is the most important thing, because the finance is the blood of that system of the company, the body of the company. So keep your cash flow positive. Retain your talent. That's number 2. Third thing is that delegation of power, giving confidence to the people, right people. Again, while having conversation, you choose the right people. Fourth thing is that if you are a growing company, okay, sometimes, as my colleagues have said, that whether you should go for listing or not go for listing, that is a different ball game altogether. But most of the times, because we can't predict the future, we don't know whether in the future where will be the fund requirement, and when there will be the fund requirement, where we are on the right place or not. Okay, so as far as the intentions are good, as far as the future goals are good, I think you must go for listing. As far as listing is concerned, we always say, and during the conversation also I have said, that I have never seen any promoters getting bankrupt or any company getting defunct because of the listing. It's only because the business has gone downside, and it's because the promoters have done something wrong into the business. They have been unable to, run their business, and when they have totally become defunct, they got suspended or they are not doing anything. So it's not other way around. Okay. Earlier, even the PE and VC guys, let me tell you, those people who used to invest into the company, where they are getting exit. It's always through two methods. Either you buy back the shares or you get yourself listed, so that I can get an exit. So ultimately,
first take my money and then go public.
So ultimately, they are also investing.
Can come into this SME exchange.
Yeah, all the investors. Yes, investors come. It's an open public issue.
Correct.
Okay, with relaxed guidelines.
Right.
So ultimately, the moksha is listing. So you have to, if you want to go for mukti and on the right path, then this is the process. But for all these things, you have to keep whatever we all have suggested, whatever we know after seeing all these things, we can guide you like that.
Okay, thank you gentlemen for being on the show.